Hello, everyone. My name is Rupen Bala, and I'm actually starting my first ever YouTube channel and making a first video. Thing about the YouTube channel going to be called The Common Wallet, and it's literally just going to be focused in on personal finance with a specialization in stocks, the share market, right? So a couple of my friends, I give them advice. I've been in the stock market for a couple of years now. I think I did pretty well for myself. A lot of my friends asked me for advice. So I was like, hey, if I was able to help my friends out, why not help the entire world out? So I wanted to create this channel that's really focused in on shares, that's really focused in on personal finance, that's going to help you get more money. And essentially what today's video I'm going to be talking about is this new stock that I'm super bullish on. And I'm going to explain in this video today, I'm going to introduce the stock, my bullish thesis on the stock, and how many shares at what price I bought it at, and like where do I see the stock going in the next 3 to 5 years. So let's get started. Before we do, I want you all to give that thumbs up for that first video, for this first channel. Subscribe, like, comment for that YouTube algorithm. FYI, I thought I'd never be saying this, but never say never. So let's get started. The stock that we're going to be focusing on today is called IPOC, Social Capital Hagia Sophia, I don't know if I pronounced that word right, Holdings Corporation 3. Now, for all of you that do not know much about finance, this actually is a SPAC. A SPAC stands for Special Acquisition Purpose Company. And what essentially it is, it's a public company that you can trade, and basically it takes a private company public, right? And what we call that, it's called a reverse merger. So this company it went public, and it basically announced that it's taking this new company called Clover Health public. Now, Clover Health, I'm pretty excited about, and you can sort of see why, right? So it's actually a Medicare Advantage and a tech company, and it's really focused in on healthcare. So, FYI, before this video, I didn't know much about Medicare Advantage, but when I was researching and I found out more, I was like pretty excited, and then I went more into Clover. I got really more excited, and I want to share to you why I'm that excited. But before I go into that, I feel like I should sort of explain what Medicare Advantage is and sort of like what tech do they have, right? Because I feel like not that many people know Medicare unless you're over 65. So what is Medicare? Medicare is basically a government-owned insurance that lets you have insurance if you're over 65 for pretty cheap, right? But the thing about Medicare is that it actually only covers 80%, right? As you could sort of see in this, there's different parts. Part A covers hospital cost. Part B covers other like doctor visits, supplies, and there's other different parts to it, but these are the two main biggest parts for Medicare. And the big thing to note is that patients pay a portion of the bill, 20%, and Medicare covers 80%. But there's no limit on the patient out-of-pocket cost. So that means even if you have Medicare and you're 65, Medicare will only cover 80%. And then the other 20% you have to pay, right? So if you don't have any other insurance, and if you go to the hospital when you're 65, let's say there's like $1 million bill, God forbid, but it's there, you have to pay $200K, right? So for this reason, a lot of people get private Medicare Advantage health insurance, which is what Clover really focuses on, right? Medicare Advantage, it's known as Part C, but it covers Part A, Part B, and it also has like even additional benefits. It has like drug prescriptions and etc. And it's basically how it works is that people pay a premium for this Medicare Advantage. It's run by private companies, and then those companies will give you insurance for that 20%. So if something happens, you won't have a major hospital bill, right? Because you're paying a monthly premium every time. So this is why Medicare Advantage is really important, because all people essentially need Medicare Advantage like when you're 65. So this is actually, it's a necessity, right? So which is actually really good for its business model. But we'll get into that later. Now, where's the tech part of this? They actually have a unique software called Clover Assistant, and based on this, right, Clover Assistant is basically a software platform that delivers data-driven insights to physician at the point of care. So what does that mean? So basically, they have, what is AI? Artificial intelligence. It's a fancy word for saying basically it's software that helps people like make decisions better, right? It basically, you give it a bunch of inputs and it gives you outputs essentially. I have knowledge in the CSO industry, so I kind of know what AI is. But you know, this Clover Assistant is actually very powerful, and basically what it does is that it'll get data from the patients, right? Whatever, like lab results, tests, and all that. And then basically what it'll do is like based off of that, it'll basically give the physician like recommended actions that they should take. So in case like they miss anything, the physicians can say, oh, like this Clover Assistant helped me out, right? This Clover Assistant gave me, oh, I forgot about this lab test. And then they kind of have these actionable items which the physician can do for the patient. So it's really good for the patient because they're getting like that extra protection. They're getting more health measures for them. And the physician is essentially, hey, like there's this reminder, right? Because if you think about it, there's so many things in the medical industry that is just hard to memorize it. Like if you think about it, that's why medical school is 4 years, PA school is 2 years, right? It's insane, right? And this thing takes time and knowledge, right? Which it really helps. Like Clover Assistant really helps with that. Now you must be wondering why I'm super bullish on this stock, and we're going to get into that. I'm super bullish on this stock for 4 main reasons. One is the Clover Assistants. 2 is the business model, which the Clover Assistant's really the crux of, and we'll get into that. 3 is the market space and the growth, and then 4 is the leadership. Let's get to it. So the first one, Clover Assistant, right? I kind of explained it a little bit before in like the previous slides, but let's get a little bit more into detail. So the unique thing about this Clover Assistant is they have the data. They essentially have access to the entire data pipeline, which is nuts, right? But what do I mean by data pipeline, right? They basically have data from the patient, right? All the results, all the tests, all the patient history, right? And then basically using this Clover Assistant, this AI software, they're actually able to give these recommended actionable items, right? They can give, as you can sort of see in this description, you can see evidence-based protocols, medication adherence, cancer screening reminders, right? So they basically have access to the entire data pipeline, right from the patient to the physician's data, right? And they're using this data, they're actually able to do a lot with it. They can make doctors make just better decisions, which is just crazy, right? If you think about it, right? Doctors have to memorize so many things. It's so hard for them to remember all these things, right? So if you have a software that really helps you focus in on those, it can really make better decisions for the user. I mean, for the patient, which helps the user, right? And if you think about it, the data pipeline is crazy. Like all these tech companies, Google, Facebook, Dropbox, right, Peloton, right, I could name Microsoft, Amazon, their whole thing is based off of data, right? Using data, they make the best decisions. And data is essentially like the gold mine in the tech industry, right? So the reason that they have access to this, it's crazy, right? This is like their bread and butter, right? This is what will allow them to disrupt the entire industry, because right now in the healthcare industry, nothing like this exists, right? This is an undisrupted industry, and Clover Health wants to disrupt it by their Clover Assistant. So I'm pretty excited about this, right? Just because, again, it helps the user. It helps the user stay safe. It helps the doctor make better decisions for the user, right? And it's just crazy in that sense, right? And I'll sort of explain why it's actually really good for the business model as well. So you can sort of see here in this slide, the power of their Clover Assistant, it allows them to save money. But how so? Clover Assistant, again, it helps the doctors make decisions at the moment, right? So with those decisions, Clover Assistant really focuses in on preemptive care for the patient, right? So you could sort of see two scenarios, right? If one person does not have Clover Assistant and the other person is on Clover Assistant, like let's say user one could just forget about it, right? You could sort of see in this example, let's say Mrs. James had the physical annual health, but they missed some markers, the physician missed something, and basically because they missed these markers, right? Again, I'm not from the healthcare industry, so I can't explain what CKD diagnosis and all these tests, but essentially if you miss these markers from a conceptual level, right, you then later on in your life, right, that Mrs. James has to essentially has these tests done later. You don't know if there's like a potential injury, so you could sort of see that they visits PCP with fatigue, they have stage 4 CKD diagnosis, then eventually there's like a ER visit, broken hip, and then basically it progresses to a worse disease, right? And then with that, it's $208K of costs that the health insurance has to pay for this, right? Obviously the person as well, Mrs. James, but with Clover Assistant and Clover Health, Mrs. James does the annual physical. They spot something. It's great. They get the lab test result. And then basically they're able to prescribe the medication based on these results, and then she's just happy and healthy. So instead of waiting, let's say a year later and having all these problems that Mrs. James has to face, right? She's pretty she's not healthy. She had there's $208K of cost, but with Clover Assistance, she was able to save this amount of money and she's able to be happy. So again, that's really good for the person, right? The person paying the premium, and it's really good for the insurance company because you don't have to deal with that hassle. So because they're able to save this much money, right? And this is just one scenario, right? But you can see how it adds on and on and on, right? Because again, healthcare is pretty expensive, right? All doctors, they require a lot of money, right? So you can sort of see these costs, but because you're able to save these costs, they're actually able to derive it towards users, to people paying the premiums, and physicians as well. So you can sort of see here, because they have better cost, right? They can actually provide their premiums at a lower cost. So you can sort of see here that column 1 is Clover, column 2 is a competitor, column 3 is the savings, and column 4 is just Medicare. So you can sort of see that if a consumer just has Medicare, and compared to Clover, 41% cost savings. If it's just the competitor alone, right, they have lower premiums. Clover has no PCP copay, no special, very little specialist copay, $5 to $20, and a drug deductible of $150 to $200 compared to $200 to $240, right? So you can sort of see the differences, and then if you do the math and if you look at the graph, they save, compared to competitors, 17%. Right? So if I have to get insurance and I'm 65 and I have to get insurance, I would probably go with the cheaper one, right? I would go with the cheaper one as long as it has all these benefits, which it does, and as long as it's providing me safe, which it will through Clover Assistance. And not only that, but through those saved costs, they can essentially help the physicians out. They can essentially get more money from claims. So if you guys aren't in the healthcare industry, I'm not in the healthcare industry, but a bunch of my friends are, and they have told me it is a pain to get money from insurance, right? They have to fight it out. It's like a dog-eat-dog world. So even though that they file all these insurances, those insurances aren't guaranteed to give all of that money back, right? And essentially, it also takes weeks on weeks to get those insurance, right? Because again, it's just a constant dogfight between the two. But through Clover Health, they actually streamline the process, and they actually give more money back. They give 2 times what is the usual, and their average payout is just 4 days, which is kind of crazy, right? So they provide physicians a really good benefit. And if you look at the third circle, right, you can sort of see that the doctor only spends approximately 5 minutes interacting with the Clover Assistants. And if you didn't know, in the healthcare space, there's a lot of desk work and there's a lot of paperwork in order to file these insurances and all that. So if you think about it, right, if you look at that chart, they spend around 49% of their time just doing that. But the thing is, the Clover Assistant essentially handles all of that. So not only is the Clover Assistant mitigating, just boring work, but it's allowing them to save money, right? And to get more money. Because the thing is, if they have less time doing desk work, they can see more and more patients, which gives them more and more revenue, right? And then more and more claims, right? So for doctors, it's a really good benefit, right? Because again, everything is streamlined, everything is just done via tech. And again, not something like this does not exist right now, so it's pretty disruptive in the industry. And it's pretty crazy because their business model, right? It's essentially a situation where all parties win, right? Clover wins, the users wins, and the doctors, physicians win, right? So the AI essentially captures the data, provides action to the doctor, and they focus in on preemptive care for the patient. So Clover saves cost, right? Clover uses those saves cost and lets patients get cheaper cost to Medicare Advantage and lets them save money compared to their competitors, right? So through this, because it's cheaper and it gives them all these benefits, they're able to acquire more and more users, right? It's like organic growth. And then basically using those save costs again, they're able to pay doctors much faster and they give doctors more benefit. So they're able to acquire more and more doctors. So it's actually a crazy business model where all parties essentially win. And in a business, you don't see that often, right? Like mostly in a business, like you have one main like winner and you kind of have like one loser. But in this case, like everyone is a winner. Like it's a cycle. And you can sort of see this is like their growth cycle from their investor presentation. And it's something that kind of similar to what I said, right? They get the data, they apply the machine learning algorithms, right, to give physicians those decisions, right? Those physicians make better decisions based off that data, right? And then based off of that, they're able to save money, right? Because they're focused on preemptive care. Using that money, they're able to give cheaper costs to the users, give more money to the doctors. Everyone wins, right? And then basically, since everyone is winning, they get organic membership growth on and on and on, right? And then as more and more users come to the system, right, the AI platform, artificial intelligence platform gets better and better, right? Because if you guys don't know about this, artificial intelligence gets better with more and more data. So it's just a vicious cycle that's just happening, and it's pretty exciting stuff. And you can sort of see that the market, it's growing rapidly, right? So right now, healthcare spending actually in 2019 was 3.65 trillion, right? You can see all these facts, right? And I'll read it out, but you can sort of see that the spending was $3.56 trillion, right? It's a fast growing market, right? We have more and more people getting older, right? And unfortunately, 80% of those have one chronic condition, 68% have two chronic conditions. So those older people will need health insurance. In the market, that industry, the health insurance industry, is worth $270 billion today, right, in 2020. But in 2025, it's going to almost double, right? It's going to be $590 billion, right? And you could sort of see that it's just growing every day because at the end of the day, people are getting older and older, right? People are crossing that 65 age limit with each year passing, or even with each day passing, right? The moment you turn 65, you need that insurance, right? So it's growing every day. And again, like throughout the years, you could look at history, but the population of the world is just growing, right? So unless we have some sort of catastrophe, right, where like the population just like diminishes, this market is not going to stop growing. So it's a good market. It's a lot of spending. People are getting older. Unfortunately, people have diseases, but this is why these companies exist, right? To help those people out with those diseases. And now you can see the growth, right? So right now, it's a pretty small company. They're only in 34 counties. They only have 57 like K members, right? Their revenue, stands for millions, so they only have 664 gross premium revenue. Right, in 2021, they're gonna essentially triple their counties, which is pretty crazy, right? They're gonna get more members, so around, let's say, like a 50% jump, and then their revenue is gonna grow approximately, let's say, like 30%, right, from 664 to 872. So it's pretty big. And then in 2020 and 2030, they have a plan by 2030 to get nationwide. They have a plan to get 25 billion in revenue. They want to get 40% of market share. And yeah, like they have a plan going forward, and this is what I'm excited about. And this is like their national plan, right? But before they go into the national plan, they need to have a plan that goes to each county, right? And they've actually done this. They have growth from the county levels, right? And you can sort of see that they target not only just one type of county, but like three different types of county, like urban, suburban, and rural, right? Because they want entire market share. They're hungry, right? So you can sort of see that in year one, kind of started from 0% and it grew, right? You can sort of see within 5 years, they were able, like the lowest one was in Bergen, which is 24%, right? And the highest one is 48% within 5 years. That's pretty nuts, right? Like if you think about it, like over 50% is a monopoly. Like in a county, they always have they're almost at 50% and it's just growing. So the thing is, it's like they know what to do at a county level. They have a game plan for all these different counties. And once they're in a county, they can apply their rule book and they could grow county by county by county. And that's what they plan to do. And that's why I'm so excited about this company, because they're hungry. They want more counties. They want to get nationwide and they have the desire to do it. And now let's sort of look at a little bit of the financials. So you can sort of see that their member growth from 2019, from 2020 to 2022, and their long-term targets. You can see their member growth 31%, 38%, 35%, and long-term 30% year after year, which is pretty good. That's a really good growth number, right? Their Clover Assistant penetration numbers, right? You can sort of see it started from 59%, Q1 was 61%, Q 2020 estimates 68%, and their long-term target 70%, which is pretty good, right? The adoption of the Clover Assistants. Now the thing is, the next thing I wanted to get down, and you could sort of see what is this MCR that he has on these slides? What is MCR? MCR stands for medical cost ratio. It is basically what it is. It's basically your cost, right, that you have to pay over essentially like all your revenues and like your expenses and all that, right? So it's just like the cost ratio compared to like all the revenue that you're taking versus the cost, right? So the higher it is, the more money you're losing, right? And in this industry, the target is around 80%. Like that's what Wall Street looks at. So you can sort of see that in this, you can sort of see that in their returning member MCR, it started from 89%, went to 82% in Q1 2020, went to 76%, and their long-term target is less than 75%, right? Their consolidated MCR, right? So that's basically taking returning members and new members. 2019 was pretty bad. Started at 99%. It's a new company. It's only been here a couple of years, right? And then it's going down, right? It's from 99%, it went to 89%, then 86%, and their long-term target is 82 to 83%. And if you think about it, like this makes sense. Like why is it really low for returning members and why is it really high for consolidated, right? So that basically means that new members that come on, their MCR is really high. And that actually makes sense, right? Because if you think about it, it's the average of the two, returning and the new users. So for new users, it's really high because their MCR is basically based off of their AI, artificial intelligence software, right? In order for their AI to be effective, right, as you could sort of see the returning members, they need more and more data, right? They need more and more data. And when you're a new user, there's not that much data on you, right? So the thing is, it takes time for that data to compile and for you to like go in as well. So it takes a little bit of time. But once that data is established, you can sort of see that the numbers drop significantly, like 10%, right? And right now, in 2022, like their estimates, right? If they're able to get 86%, they're actually able to get below Centene, and they're just hovering a little bit around Humana's, right? So if you think about it, right, like let me take it back a little bit, but Humana, Centene, and United Health Care, those are the three main competitors, the three like titans, you want to say, in this market. So Humana has been around for around, let's say, like 40 years. Centene's been around for around 20 years, and United Healthcare has been around like for 40 years or more. So you can sort of see that their MCR is around like 83% for Humana. Centene is around 88%, and then United Healthcare is just a beast, right? And it's like 70%. But you can sort of see that their long-term targets, they're going to beat Centene, which is a main competitor, right? So just for a startup company that's kind of like getting into the space, to get that MCR level to that level is really, really impressive. And you can sort of see here that their market leading growth and margins. So you can sort of see their revenue is increasing, their members are increasing, right? Let's say by 30%, also by 30-ish%. Their EBITDA margins, again, they are losing money, right? You can sort of see that, they are losing money. They were losing a lot of money in 2018, 2019, and now 2020 is coming, they're losing less and less money, and they're getting to that break-even point. So this is like a really good time to get into the stock, because once they turn profits, it's indicate profitability. And that's success, right? Once that happens, the stock will skyrocket. But according to their leadership, it will take 2 to 3 years. Like, they're expecting profitability in 2023-ish or 2022-ish, around that time frame. And when they do become profitable, it will be a beast. And you can sort of see here that in Humana, so over here, I kind of just gave you the whole entire market, the 3 competitors, and you can sort of see like the different stocks. So you can sort of see that right now, actually Clover's market cap is around $4 billion, and you can sort of see Humana's is around $57 billion, right? And you can sort of see that right now it's around a $436 price versus Clover, when I showed you in the beginning, it was around $10. And you can sort of see that this stock jumped 20x within 40 years. Pretty big jump, right? You put $1,000, right? 40 years, you get 20,000. You could buy some car, right? You could buy a Tesla coming forward, whenever they release their 25K EV, right? But that's pretty cool, right? You're just growing that money. You can see Centene, right? Centene has a market cap of around 38 billion, right? And they started at $2. Over the last 20 years, they were able to around, like, let's say 30x, which again, it's a solid investment. That's a very, very solid investment. You can sort of see that United Health group, you can sort of see that this United Health group, like the beast, right? It was able to 1,000x over the last 35 years. And their market cap's around 307, so you can sort of see that this is the monster. This is like their main competitor. And you can sort of see that it's just, again, you just wait, you put money into these health insurance companies, and they skyrocket. But it takes time. And you can sort of see that eventually, their long-term targets, if they're able to get to their long-term targets, they beat Humana and they beat Centene, right? So again, just showing how disruptive this Clover Assistant is, and like what impact it can have on their MCR, and really what Wall Street looks at. So again, the long-term vision, this company has lots of potential to grow. And you can sort of see that in this slide, you can sort of see that total shareholder in the return in the last decade, right? You can sort of see that from Facebook returned like 2.9, right? Google returned 1.9, S&P returned 1x, Humana, Centene, United, all above 4 to 5x, right? So again, it's a pretty big investment return, right? If you're able to put the money, right? So they actually grow more than tech. And I was actually very, very shocked just to see this. So it's impressive. It's impressive, right? And it just gives me more confidence that this is a good stock to put your money in. And the thing is their leadership, right? If you see their leadership, right? This is their executive team, right? Vivek Garipalli is their founder, their CEO. And he's a pretty smart dude. Like, I've seen a bunch of his interviews. I've seen so many of his talks, right? And he's been in this industry for a really long time, and he knows what he's doing, right? And Andrew To is a really impressive person. He's a president, CTO, worked at Google. Like, he has that experience, right? And you can sort of see that their whole executive team has a good mix of tech, and it has a good mix of healthcare. And all of these leaders, they know what they're doing just to lead the company forward. And their biggest sort of believer, right, is Chamath. If you haven't heard of Chamath, he's basically a billionaire VC investor. And how I look at him is he's literally like the next Warren Buffett. This man has a vision. Again, as I said, like, this is a SPAC, right? This is IPOC, right? If you think about it, that means there's 2 other ones, right? Like IPOA and IPOB. This man is leading these SPACs, these IPOA, IPOB, IPOC, and he's actually planning to do it all the way from IPOZ. And he literally has the intention of being like the next Warren Buffett and opening like a Berkshire Hathaway. So this man has the vision. He has the knowledge. He was an early Facebook investor. He was an early Slack investor. He was an early Zoom investor. Like, this man knows what he's talking about. He actually went public with the IPOA, which is now Space, Virgin Galactic, right? And when it started, it was like $10, and within 2 years, it went to like $20, right? And this man thinks about the future. I would say he's like a combination of like Warren Buffett and like Elon Musk, right? Like, he thinks about what's like innovative, what's gonna disrupt these industries, but then he also has like the financial background and the knowledge to figure out which companies will accurately make these disruptions in this space. So, if you look at his couple of his interviews, I will guarantee that you will be impressed by him. And, I've been following him for a really, really long time, and, he knows what he's talking about. And since Chamath is doing the SPAC, I'm full confident. And it just gives me more confidence about like the leadership and sort of like the vision going forward for this company. And also, like, he also put his own money into this as well, right? So his honor, his name is also on the line. So that's another thing to think about as well. So another thing is that this stock actually dropped around 16% after the announcement. So a couple weeks before, it was around $13, and then when they announced this Clover Health SPAC, it dropped around 16%, right? And it's actually kind of crazy because this is actually a really good buying opportunity, but it dropped, right? Usually SPACs are known for like that really, really, really quick money, but basically, like, a lot of people are like, this is a health insurance company. This will take time to grow. It will reach profitability in 2023. It's a health insurance company. It's not like savvy or anything, but they don't think it's a tech company, but it actually is a tech company underneath, right? So a lot of people weren't really interested in it, but if you really investigate, if you look at their investor presentations and you do the research, this company has a great business model and a great leadership, and they know what they're doing, and it's a great buy. Right, so how many shares did I bought, right? So I actually bought around 465 shares at around 1070. So for around a 5K. So right now I'm losing money, right? But this stock is a 5-year wait, right? You put it, you buy it, you put it in the filing cabinet, and you just wait. You saw those Centenes, those Humana, those United Healthcare like finance charts. You saw it grow. This is a stock that you just chill, you hold on, and you just wait for it, and you just close your eyes, wait. 5 years, you can sort of see it grow. Now, where do I see this stock in the next 5 years? I actually see this doubling or even like 5xing in the next 5 years, right? And it's, again, right, it's because of their Clover Assistants. It's because of their all-win business model, right? It's because of their market space, their growth, their leadership. They know what they're doing and they know how to execute. And I'm really, really excited, and I'm really, really bullish for this stock. And yeah, and I hope you all really liked this analysis of IPOC. If you guys want a good investment, do your research, but you can sort of see that I'm pretty bullish on the stock. I'm pretty excited, and I hope you guys really enjoyed. So if you guys enjoyed it, please comment, please like it, please subscribe to the channel. Tell me your opinions. Do you like it? Do you not? And would love to hear from you. So thank you for watching the first YouTube video of the Common Wallet, and I'm excited just to post more and more videos, and I hope you all have a great day.